So good afternoon, everyone. I'm Professor Lavina Khilnani from Taxila Business School. We teach PGDM, we take MBA programs, and we are here with you so that we can have a conversation and understand how the stock market works, how the investments are done. We really want every one of you to stay connected with us, be active, stay interactive with us. And if you have any questions in mind, definitely let us know. We will help you, making your investments done in a right way, in the right direction. We have seen in the last couple of months, the market has been very volatile. I think you as investors must have also observed the same thing. Today, I'm in conversation with Professor Himanshu from Taxila Business School, and he's the finance faculty with us. He has been guiding students for investments. He's taking a lot of subjects like investment banking, corporate finance, right? So I think it is going to be a very good time being with him. So Professor Himanshu, before we begin with this, I really want you to tell the students what exactly you do, where you come from, what has been your experience, right? And how your experience would actually help our students understand the investment plans.
Thank you so much, Lavina ma'am. So basically what I have done in my past is, again, I was a student like this before. I've done my MBA. I've even done masters in financial economics as well, internationally. I've been through different jobs, different profiles. I have worked as a financial analyst for a very long time. I understand the company, what needs to be done, what and how a company should be working, everything from core till the end. So you should be able to understand in terms of finances that first how a company should work before you enter into any kind of investment. Because if you don't know where the money is going, you will never be able to understand where the money is.
Very true. Very true. Rightly said. So, sir, to begin with, we have seen the market is very volatile. People have made huge investments. Some are losing, some are making profits. So, how do you think where the investments have gone wrong? Where have they been right? Who are those people who are making money out of it? And who are those people who are losing money from the market?
So in that case, it's just not the financial aspect that we should be looking at.
Okay.
It's basically we should be focusing on the psychological aspect of an investor, because that is where actually the money is.
Okay.
So if we'll talk about where the people have gone wrong, is something where everyone thought that this is a quick money. Stock market is never a quick money.
Very true.
The moment you think that it is a quick money and I'm going to make like the other person who just double its money in 21 days, like Lakshmi Chit Fund, everyone remembers.
Yes.
So that's not the case with the stock market. It's completely a patience game. You have to understand this. You cannot expect like, okay, I entered today, tomorrow my money is going to get double, or I'm going to earn 20% and get out of it with a profit. Sorry, can't happen, never happen, and never will happen.
Yes.
You might be able to take out one time, or you might be able to replicate it twice. But the moment you try to do it third time or fourth time, your psychology changes.
Right.
You become more greedy and you're like, okay, now I can do this every time, and you tend to start losing money.
Very true, very true. I really want to add on here, one of the times when I was interacting with the people around, and they said, this is a very low market time and we're losing money. And I don't know which psychological factor and feeling works here. They start taking out money from the market.
Yes.
So what do you think? How they should have a control over this psychology? And what do you think they should have been doing otherwise?
So this is first of all panic.
Yes.
This is what is triggered by panic, sheer panic in the market. Suddenly the war broke. We have a recent war going on in our hand.
True.
That is US versus Iran. So can't stop it. Nothing is in our hands.
Very true.
All we can do is we try to keep ourselves safe. That is, when we feel safe, we have got cash balance with us.
Right.
Not we have stocks. Safety is cash balance, not your stock holdings. So that is the main psychological barrier that everyone faces. So whenever you try to go beyond that barrier, you try to break it.
Yes.
That is when you feel a challenge that this is not your natural sense. Now, as it was rightly said that the market is at low. So while at low, you need to understand that this is the right time to buy. 100% agree. It is the good point to stay invested in the market. It is good time to actually invest more in the market. But I'm challenging every single fiber of your being in saying that you should invest more when you know that market is going down.
Okay.
Because you are not comfortable with it.
Right,
You already know that it is going to go down.
How?
But that is not how the stock market works. Stock market is going down because everyone is feeling a pressure.
Yes.
That is why they start taking the money out.
Oh, right.
They feel the pressure around them in the economy, in every sense, and then you feel like the war is happening. Why should I invest more? I
Very
would
true.
keep my cash.
Right.
Exactly the same thing happened in COVID times. It dropped by 30%. Market crashed by 30%. Correction happened for 30%. Very big correction.
Okay.
If you would have taken that position
Yeah.
from COVID times, from 2022 or 2023 till date, your money would have already doubled.
So now at this point of time, there are a lot of conversations going on. Maybe the grandfather has a different perspective of making the investments. Maybe the students of this particular age, they have different perception. They might say, invest in solar, invest in AI, right? Grandfather would say, stay, tuned with FDs, right? Somebody else, all generations, they have different viewpoints. So what do you suggest our students?
So in terms of going forward from here on,
Yeah.
the times that we are seeing, it is never too good to keep invested in only one instrument.
Right.
Because let's say talk about grandfathers. FDs, fine. FDs gave 11% return then. FDs give 6% or at max 7% return now.
Right.
You're blocking your whole money.
Yes.
Not letting it grow. It's okay for everyone who doesn't want to keep on looking at stock market or any other instrument for that matter. They just want the peace of mind. They've got a good regular income. They want their income still, the whatever money they have, to keep on getting some money out of it. By all means, FD is your cup of tea.
Right.
The people who are trying to replace their regular income through their passive income, for them, you need to go ahead and challenge yourself in investing stocks or mutual funds is another stability option.
Okay.
It's not your passive income option because you are actually investing in the market altogether. That you cannot replace your regular income with.
Right, right.
Because the market is expected to grow 10 to 15% at max
Right.
at any given stage of time. And if there is a recession, then again, you might face some negative downturn. You might only earn 6% till the maximum of 15%.
Okay. But did you expect really gold to go that high? 1,54,000 something now. It has crossed, in fact.
So gold comes into the picture when you're actually going to sell. In India, the thing is, if you are buying gold, a physical gold, you are not going to sell it. You are going to be happy about it that I bought gold at, let's say, 50,000 rupees. Now it's 150,000.
Yes.
I've made my money just triple.
Yeah, very true.
Have you sold it? Have you got the money in your hand, or are you still sitting on the gold itself?
Very true, very true. I think at this age, when I look at my students, they might not be investing in gold as such. There are a few who might be earning. There are a few who might be actually relying on their pocket money. So I think the investment is not huge.
Yes.
So if you have to give a piece of advice to my students, what would that be?
Everything should be digitally invested.
Okay.
Everything should be digitally invested. Why? Because it gives you the freedom to take out your money at any time. I know you have got a less income. You want to increase that income.
Yes.
So you want a freedom to basically rotate that money around, not letting it sit. Because the moment you invest in gold, let's say even how small that is. Let's say you have bought 0.3 grams or 0.3 tolas of a gold,
right,
at 30,000 rupees.
Yeah.
You still have to hold on to that piece, that physical piece. Rather, I would say go and buy a digital gold, keep it invested. Whenever it grows, take your money out again.
Very true, very true.
It's safe.
Right, right. So, if we compare this current market with what has happened in the last good number of years, maybe 3 years from now, maybe, before 3 years or 5 years, what do you think, what kind of changes have happened? And if you had been in the past and you have the liberty of rectifying your mistakes, how would you do that? And what mistakes would you rectify?
So if I talk about something that was happening in the past versus what is happening, what the change has come through, people have forgot that money is always slow. It explodes after a certain limit. So let's say you have reached $1 million mark.
Okay.
After that, your wealth will explode. But that $1 million mark, in Indian sense, if I talk about that, is 1 crore.
Yeah.
So if you make 1 crore, that is the toughest journey to take. Which elder generation, the older generation understood.
Yes.
They were like, this is the toughest part. They kept at it. Even after 1 crore, they could not change their psychology. They were still at it and they kept on doing the same thing over and over again. So their wealth did not explode that much.
Okay.
So you have to understand, whereas this new generation, this thinks that they are already at 1 crore. All they need is the explosion.
Very true.
But you need to work for that 1 crore. That is still missing. You have to reach there and then it goes up.
Wonderful. You're carrying on your legacy. Basically, you have the foundation all set. You just have to explode as set, right? Wonderful thing. So I think by now, with this conversation, my students have been able to understand that what this program is going to be all about. We're going to talk about how the investments were done, how they are being done right now at this present time, and what kind of ventures, what kind of investments would give you good returns. Of course, there is a disclaimer, right? What we talk about, what we say, they are not supposed to be followed as it is. But yes, your own intuitions, your own understanding has to be used intelligently and mindfully. So I think we can end up this discussion and we can just find out what more is going to come in our next sessions. I'm going to take my session where we are going to talk about, how to analyze this particular market, right? You have to understand the political environment, the economic environment, right? Where these companies, they operate in. Yes, nationally and internationally. So global market, equally, they need to be understood. Other than that, we are also going to talk about the companies, their profile, their analysis. And based on that, Sir is going to give you the piece of advices, right, where you can take your mindful and intelligent decisions while investing. So thank you for now, right? Stay tuned with us. We'll definitely come up with more such interactive sessions for you. Thank you.
Thank you.